All right, so inflation remains a problem. FMCG typically tends to get a hit when inflation is high, but this time around FMCG has actually seen slightly better fortunes because of higher wages, particularly in rural areas. Mr. Sunil Duggal is with us, the chief at Dabur, with his perspective on the big picture, but also corporate-specific triggers. Mr. Duggal, firstly, it's been a while since we've had you on, so thanks so much for making time for us. Appreciate it. I want to get a sense from you. How has inflation impacted you? What's the broader picture pricing FMCG right now in the light of that high inflation?
You know, the inflation, high levels of inflation which we've seen over the last 1 year obviously have given rise to very substantial price increases compared to what we have been doing in the last 3, 4, 5 years. And that has had an impact on demand. We do see some signs of demand slackening, particularly in the rural areas. It's temporary, consequent to the sharp price increases, and as and when we don't take up prices with the same aggression, the demand would revive. That's what we expect, but at the moment demand is on a little soft compared to what it was, let's say, 1 year ago.
So demand is a bit soft. Just I'm wondering, sir, in terms of the pricing picture, the margin picture, and how that's all shaping up for demand. So again, a slightly broad question, but could you give us a sense?
I think it impacted demand and more particularly margins in the last 6 months or 9 months. We're now seeing revival of demand happening. We're seeing substantial uptick in volumes. We'll also now start seeing some improvement in margins as compared to what they were 6 months ago. So I think there is a revival which is happening as we speak, and which will further accelerate and gain momentum in the next couple of quarters. But perhaps the margins will not really come back to the levels which we saw 2 years ago, which were extraordinarily high and have been corrected through market mechanisms.
But input cost pressures are easing for you?
See, some signs of easing in key raw materials. You mentioned petroleum, and there are others. But having said that, I think the real outlook is that there will be extreme volatility in terms of raw material prices. So it's very hard to predict whether there's be any long-term deflationary cycle coming up, or whether there would be a resurrection of the inflationary cycle, or whether there will be something in between, which means volatility. I tend to think that volatility will be very high, and which also presents opportunities. You catch a down cycle, you buy into positions, and you protect your raw material costs for the future. But the outlook is pretty murky at this point in time.
So any indication on whether this quarter's margins would be better than the previous quarter?
Well, the margins in Q2 would not be very different from Q1, because we've been sitting on high raw material inventories, high price raw material inventories, which we are consuming. So I don't think there will be any revival of margins in the second quarter, but third quarter should be better, and perhaps the fourth quarter should be even more so. Having said that, I once again mentioned that there is extreme volatility, so it's very difficult to predict how the margin story would be played out.
Fair enough. So the demand side probably is a bit easier to predict. You alluded to the fact that demand's looking better. Could you segment that for us, category-wise, if possible?
Well, there are always pockets of high demand and low demand. At this point in time, we're seeing very high demand in our food beverage business, in some home care categories, which are the smaller categories which offer much more headroom for growth. And some of the more mature categories in hair and oral care are showing comparatively sluggish demand. But these are cyclical matters. I don't think it reflects any long-term trend. Obviously, the less penetrated areas like fruit juices and let's say air fresheners would have higher growths because these trajectories are coming off very low bases. But we do expect demand to resurrect itself once the pricing table becomes stable, even in the more mature categories like hair and oral care.
The other problem, sir, and for FMCG companies that have expanded globally is what's happening in parts of Europe, Africa, US, but in particular the situation in Europe and Africa. How is that impacting you, sir?
Well, the situation in Africa does impact our business in Northern Africa, particularly in Libya, Yemen and Syria. So obviously those places business has been practically non-existent for the last 6 months, ever since the disturbances happened. But fortunately, we are seeing perhaps the last of that played out, and Libya seems to now be on its way to recovery. Of course, it will take a little bit of time for that to happen, but hopefully things should stabilize there. Outlook in Yemen and Syria is still a little cloudy. It might take a little bit longer. So it has affected our business to some extent. Europe, quite frankly, very little, because we do business at the periphery of Europe in Turkey. and that's not been affected by the European problems. Of course, we have a small business in the UK, but that also has been, that's pretty much confined to the Indian diaspora, and that's a very steady business, so there's no impact on the economic downturn in Europe.
Libya in particular, I mean, there's distribution network as well on the ground there. Can you give us a bit more on what's happening in Libya?
Yeah, sure. I think we'll try to fill up the pipelines, re-establish the distribution channels, and once again resurrect the business, which, like I said, for the 6 months hasn't happened, and we still don't know the situation on the ground with regard to the distribution infrastructure, whether it still exists or whether it's still whether it will have to be rebuilt. So I think the story has to be played out. We'll go there as soon as normalcy revitalize the business.
Just, one last question on the international side. Have you done the math on financial impacts, sir? Balance sheet and impact on your financials next couple of quarters?
See, in these markets, North Africa would be, I'm excluding Egypt, which is by far our biggest market, but in the disturbed geographies, the business size would be around $10 million to that extent, and around half of that would be seriously affected by the disturbances, which when I say that, I mean that there would be practically no sales happening for the last 6 months. So obviously it's been a bit of a setback, but it's not too big in the overall context of our business, so I don't think it does any real damage to our financials.
All right, got that, sir. A couple of forward-looking questions. One related to a report suggesting that you're planning to bid for NDTVProfit. Any thoughts?
No, I don't know how that report appeared. There's no substance in it. The bid really hasn't come to us. So we have no view on that particular company. If and when it does, we will have a look, and we may or may not choose to put in a bid. But I think it's premature at this point in time to comment upon A, whether we are even looking at the opportunity, and B, how much price we are willing to pay for it.
All right, so then I guess the focus on organic growth, new product launches, any big plans coming up?
I think there would be a new hair oil which we will launch in the next few weeks. There would be new health supplements, and perhaps in the fourth quarter of this year, new over-the-counter products from our healthcare portfolio. So there would be a fairly robust pipeline of new products which we will enter into the market with.
All right, Mr. Dagur, we have to leave it at that. But thanks so much for joining us, sir. Interesting to hear that FMCG has withstood the high inflation pressures in this cycle. Very interesting, and very interesting change in dynamics as well. Thanks so much, sir. Appreciate you taking the time to be with us here on Power Lunch.